So I look at those kinds of opportunities. Basically, I'm looking for opportunities where there's value, but there's bad news, or there's overly ridiculously good news for companies that actually don't produce any profit, and that anyone should look to invest in the stock market in those scenarios. The second one is this concept of, well, let's just pay 40% tax. It almost never makes sense, but today it makes ridiculously low amount of sense given that you're being offered discounts. So maybe you don't like multifamily. Well, buy mobile homes. You're going to get a discount.
When if ever are you investing into the stock market, traditional stock market is the first question. Does Neal Bawa invest, right? Someone who has over $1 billion under management with the clients, right, for multifamily and different real estate investments. And then number two, what would you say to the person who says, yeah, Neal, just go ahead and pay that, that 40% tax. And as a financial advisor, I'll manage the capital, but you should just go ahead and pay that. What would you say to the person that was listening to this right now?
So I'll answer the first question. I do invest in the stock markets. I do not stay invested. So I invest in amazing companies that have lots of free cash flow and have heard very bad news on a given day, and their stock has cratered because of that. So I invested in Netflix on the day that the Russian war started, and Netflix was basically forced to pull out. They lost 2 or 3 million people in Russia, and because of that, all of a sudden, for the first time ever, their subscriber count dropped and their stock cratered. And so I bought Netflix and I sold it about 4 months later for about almost double the price, maybe 50-60% increase in price. So I had a huge increase in my money. Southwest had bad news on the day when their reservation system crashed and they canceled thousands of flights. Amazing company, great free cash flow. I make investments on the bad days because bad days do not make a good company bad. You're just having a bad day, you get negative buzz, all of the artificial intelligence algorithms that control the stock market, they all point in the downward direction because all you're getting is bad press. And so, the price just keeps plunging and usually drops more than it should. So I've purchased many stocks in this particular way, but I'm always looking for companies that are, very, very strong on revenue and things like that. And I also like to short stock that is hyped up. So there was an electric car company that their stock shot up a while back. I can't remember what they're called, but they were a Vietnamese car company. They debuted on the U.S. stock exchange, and the stock just went completely crazy. At one point, they were worth more than GM and Ford combined. I shorted that stock, and now the stock is worth maybe a tenth of what it was when it debuted. So it came down very quickly in a matter of months. So I look at those kinds of opportunities. Basically, I'm looking for opportunities where there's value, but there's bad news, or there's overly ridiculously good news for companies that actually don't produce any profit, and that anyone should look to invest in the stock market in those scenarios. The second one is this concept of, well, let's just pay 40% tax. It almost never makes sense, but today it makes ridiculously low amount of sense given that you're being offered discounts. So maybe you don't like multifamily. Well, buy mobile homes. You're going to get a discount. Maybe you like retail. Buy there. You're going to get a discount. Office. I mean, every commercial real estate asset, at the end of 2023 is offering a discount. And those discounts are likely to last for either a year for multifamily or 2 years for other assets. So when you have discounts available on the buying side, and on the selling side, you're making a huge profit, it doesn't make sense. Normally what happens 99% of the time is this: when you're doing this, when you're making a huge amount of money on the buy, on the sell, you're losing it on the buy because if you're making a huge amount of money here, the market's overheated. So when you buy on the other side, the market's also overheated, so you're paying too much. Well, today is a very unusual time where if you're making all this profit, clearly you're selling and you have a lot of this profit that you have to pay taxes on, you actually have a market that's discounted. That's very unusual. So I really can't think of a scenario where you would want to pay 40% tax in California.